Good morning and welcome to Market Day Report. I'm Chris Swift. It has been a fantastic morning so far, and coming off of Friday's a little bit lower trade and a little disappointment that we saw in the small grains and stocks report that we saw on Friday, kind of left everything a little bit shallow. So let's see what we got this morning coming in. And it looks like on our corn board this morning, a little bit of a reprieve. I've got December corn up 2.5, 479 and a quarter, 76 the low, 81.5 the high. Out into next year already, March up 2.5, 494 and a quarter, with some of the back months still holding just above $5. In the soybean market, we were pretty weak on Friday, still carrying a little bit of that weakness this morning. Now with the front 2 months under $13, with November at $12.70, down 5. Low's been 65 and 3/4. March beans down 6 1/4, 1304 and a half. In our wheat trade, it was a little bit soft on Friday as well. Getting a little reprieve on it as well. December wheat up 7, 548 and a half. March wheat up 6 3/4 at 580 and a quarter. New crop July fixing to go in the ground up 5 1/4 at 617 and a half. Kansas City hard red winter wheat this morning a little bit firmer as well, with December up 5 3/4, 669 and a half. And the new crop July up 5 1/4, 685 and 3/4. We'll wrap it up with Minneapolis spring wheat this morning, up 7 3/4 on the December at 717, with the March contract up 5 3/4, 739 and a quarter. I have a guest this morning, Brian Hoops from Midwest Marketing Solutions, and I'd like to welcome him in this morning. Good morning, Brian. How are you this morning?
Hi, good morning, Chris. Good to talk with you. How are you doing?
Absolutely, doing great. We left Friday on a little bit of a sour note, but kind of a little better this morning, at least not as much follow through on it. Do we see anything that's really going to stand out this week going into the first of the fourth quarter?
Well, there's a couple things coming out over the weekend and early this morning. First of all, we've had a couple export sale announcements once again. Now, China is going to be on the holiday until about a week from today. So prior to their going on this holiday, they had purchased some soybeans. It was announced this morning. That's another 2 cargoes or so of soybeans sold to China. 132,000 metric tons. And there was also another corn sale. We had 2 days last week where Mexico bought corn from us. Friday was the most recent session, and then they bought 210,000 metric tons again, and that was announced this morning. So some positive demand news for corn and soybeans. This is the time frame where we normally make our seasonal lows, and we could certainly see some sort of a bounce from these areas. It does seem like this 475 to 485 area is where corn is starting to find some export business, especially to Mexico. And we're going to have yields, I think, to really start increasing to push us down a lot lower. From a historical standpoint, you mentioned that the stocks report that came out Friday, it was bearish to soybeans and wheat, but kind of friendly to corn. From a historical standpoint, corn rallies the day after the stocks report 8 out of the last 10 years, and it looks like it's on its way to 9 out of the last 11. And wheat has the same pattern, but only 6 out of 10 years does it close higher the day after the stocks report. So wheat and corn trying to bounce in here, despite the fact that there's some decent rain showers for the hard red winter wheat belt this week.
Yeah, it's kind of interesting. So let's take a look at we know that we've got some drought issues for the Mississippi River. We know that the barge traffic is going to be a little bit lower. On-farm storage is going to be really important, but something I've kind of noticed, and even though we're just now getting this year's crop in, but we already have to start thinking about next year, that December of 24 contract has really been consolidated. Is there anything we really need to pay attention to in this consolidation that we pretty much know it's going to break one way or the other here pretty soon? So do we want to be more prepared for the upside or the downside for our next year's crop?
Yeah, a lot of producers are probably not even thinking about looking ahead to next year, just from the standpoint of concentrating on getting this crops out of the ground, put into storage and tuck away. You can look out into the summer months, and there's a lot of carry that the market's offering right now. You mentioned the barge rates or cost are soaring along the Mississippi River, and that's a direct reflection of what's happening with the spreads and the basis. Now, basis will normally narrow this time of year as producers are very reluctant to be sellers. but we're putting in a big carry because the market does not want the crop right now. It wants it maybe more into the summer months. So last I looked, July to December corn was about a 28-cent carry, over 42 cents for November to out to July soybeans. The market's giving you a big incentive that I think really need to pay attention to for corn and soybean producers. If you're putting that crop in the bin, you can lock in that carry plus capture some basis, and there's some big gains to be made over selling the crop at this time of the year.
Fantastic. Brian, I certainly do appreciate that. Stay with me. We're going to go away for just a few minutes and take a commercial break. I'll be right back with Brian Hoops with Midwest Market Solutions. All right, we're back. Let's take a look at the cattle market here, and we left the weekend with a little bit softer note on it and see how we're going to start out this morning. We closed on Friday, the October, at 184.20, down 230. December down 250 at 187.92, and the Fed Fat's down 212 at 192.50. Feeder cattle market was soft as well, with the October contract down 225 at 252.47. November down 277 at 254.90, and Jan down 2 at 258.05. Those front 2 months are coming right in line with the feeder cattle index that expired, with the September having expired on Friday. Lean hog market was down sharply. The hogs and pigs report came out a little bit more than what they were anticipating and sent the hog market down pretty hard, with all of the hogs and pigs report a little over 100 to 101%. October hogs were down the limit, 375 at 80.20. December down 375 at 71.77. So let's take a minute to ask Brian to come back on again, and we'll talk livestock here for just a second. And Brian, we saw a little bit of a softer tone on just about everything on Friday. What are we expecting this morning for the opening?
Yeah, the hog market was sharply lower, as you mentioned. Limit down on Friday, so we will have expanded limits in the hog futures. I believe it's $5.50 is what they expand to. In the cattle market, I think 3 out of the last 4 trading sessions have been very volatile, triple digit type gains or losses. So a lot of swings in that cattle market. When you do that near a contract high, or sometimes that near some lows, that's an indication that we are changing the direction, changing course. And I think we could see a decent setback here in these futures. Last week's slaughter pace, a big disappointment, only 612,000 head. Well below expectations, and it's a sign that the Packers are probably going to keep cutting these kills in an effort to regain their lost margins. The Packer margin is probably about almost $70 a head in the red right now, and so it means they don't want to pay up for the cash markets. They're going to cut some kills. So we look for cash to be steady at best this week, probably lower, and the futures market to kind of price in some of that lower cash markets this week. We're 55,000 head smaller kill last week than we were a year ago at this time. We also have cattle options for October going off the board on Friday. Deliveries begin next week, a week from today. So a lot of things going on in this cattle market. And of course, cash is always on the forefront of what the traders are talking about. Sure.
And we've seen the weights come up just a little bit as well. So I know that we're trying to slow things down on the slaughter side of it, and that kind of helps the cattle feeder get a little bit of a gain to put some of those pounds on it that we're going to. Brian, I certainly do appreciate you being with us here this morning. Brian Hoops with Midwest Market Solutions. So, Tammy, what a great way to start the day off, and looking forward to the markets, and opportunity abounds.